Laila, thanks a lot for coming on. I guess we will just start, and I'm probably going to ask all the guests this today. What are your thoughts on today's move with the tech-led sell-off?
It's a little bit unexpected to be that like that for one day, but it's not unexpected that it was going to happen sooner or later. They had really gone up quite a bit very fast, and it was unsustainable in the short term. But this is really a short-term volatility that is expected, and the market will go on.
And so I think it's interesting. Would you see this, because you like some of these more tech digital type companies, do you see this maybe as a buying opportunity for someone who is looking to accumulate some of these names?
Yeah, as someone that doesn't have it already, I really believe this is a very good time to dollar cost average. I certainly would not take, 100% of the funds that we're going to allocate it to that and put them all into work today. But certainly a good portion of the money that you have allocated that you want to go into these sectors, this is certainly a good time to do that, to buy in dollar cost average in. It goes down a bit more tomorrow, buy in some more. But I don't think this is a long-term trend. This happened back in May and June, and it's going to happen again. And I do think it's a buying opportunity for some of the funds.
And so if we are looking this at long-term trends, or you are a long-term investor, what are you seeing here? If you've got the S&P 500, you've got some fixed income that you might be looking at, what are you telling your clients, or what should long-term investors be looking at now?
Well, I do think that the market is certainly, in the long term, I do see a tremendous growth. I see a lot of pent-up demand. I see things getting better. I do see that this is, short-term interest rates are going to stay low. So for long-term investors, like I said, this is a good time to dollar cost average in if you're not in the market already. On the short term, I do think that it's good to rebalance a little bit and back into some fixed income, because we do expect some volatility to come because of the election and just because of momentum traders, which is what's happening today. So on the short term, we're a bit more cautious. On the long term, we're positive.
And so if you're also out there and say, we're looking at the election coming up, you've got interest rates, are you looking for stimulus potentially to maybe be something that could maybe keep markets going here? Is that maybe the next big headline we should be looking for?
I do. I think they will come up with some sort of stimulus package sooner or later, some sort of compromise, especially days like this kind of forces their hand even more. So I do think that they're going to come to the table, and we don't know what the dollar amounts are, but any amount of stimulus is going to be positive for the market.
And then looking at the big report, I think for the week, a lot of investors and economists are focused on is going to be the employment situation report tomorrow. Well, you got the weekly jobless numbers today. What are you looking at for tomorrow? And did any of these weekly jobless numbers come in as a surprise or change what your expectations are for that monthly report?
I think they're going to come in within line. I don't think it's going to be a big surprise. I do think possibly some of the sell-off today, that some people are worried that we may the numbers may be a lot less than expected. But I do think that there's pockets in the economy, pockets all over the country that are doing well, and I do think that will come in line. And I do think that might be also another reason the market could recover, because you have the long weekend coming, and people are a little nervous about, there's a lot of gains they've had, and so. But I do think that employment numbers will probably come in line tomorrow.